Malayan Banking Berhad, commonly known as Maybank, is the largest bank in Malaysia and one of the leading financial institutions in the ASEAN region. Established in 1916, Maybank has grown from a domestic bank into a regional banking group with operation in more than 18 countries. The bank is headquartered in Kuala Lumpur and operates in the banking and financial services industry. Maybank offers a wide range of services, including retail banking, corporate banking, investment banking, and Islamic banking. With approximately 43,000 employees, Maybank plays an important role in supporting individuals, businesses, and economic development across the region. Maybank was chosen for this case study because its financial performance clearly reflects the impact of COVID-19 pandemic and the recovery after it. In the year of 2020, Maybank's profit declined due to economic slowdown, reduced lending, and fewer banking transactions. However, from the year of 2021 onwards, Maybank showed a strong recovery with profit before taxation and zakat increasing steadily and reaching 13.7 billion ringgit at the year of 2024. This clear decline followed by consistent growth highlights Maybank's ability to adapt and improve its performance in the post-pandemic period. For the first issue is, Maybank experienced a decline in operational performance due to the COVID-19 pandemic. In 2020, the movement control order slowed down economic activities, causing fewer loans and banking transactions. As a result, Maybank's net profit fell by 2.3% in the third quarter of 2020. The bank also increased loan loss allowance to prepare for possible customer defaults, which put more pressure on performance. In addition, branch closed, reduced operating hours, and workforce limitation disrupted daily operation. Overall, the community financial services segment recorded a 20% drop in pre-tax profit, showing how COVID-19 significantly affected Maybank's operational performance.
During the COVID-19 pandemic, Maybank faced operation disruption due to reduced banking activity and economic slowdown. To address these challenges, the Maybank continued its repayment assistance and loan support program throughout 2021, aligned with National Recovery Initiative under Permekasa Plus and Pemulih. This program provided a flexible repayment arrangement, including loan moratorium, restructuring and rescheduling, targeting individual borrower, small and medium enterprises, and also a business client who were still financially affected by the pandemic. These measures allow customers to gradually transition back to normal repayment cycle without facing immediate financial pressure. By November 2021, approximately 30.6% of Maybank total loans in Malaysia were under repayment assistance, demonstrating the scale of the intervention. Throughout this initiative, Maybank acts as the primary change agent, adjusting internal credit and repayment policy to align with the government recovery measures while maintaining continuity of banking operation during the post-pandemic recovery phase. Maybank implemented digital transformation as a key intervention. This initiative was guided by the M25 plan and the Digital Bank of Choice strategy, which focus on improving service delivery, operational efficiency, and ensuring business continuity during movement restrictions. As part of this strategy, Maybank enhanced their digital platform, including the Maybank to You mobile app and MAE digital wallet. New features such as QR payment, digital remittance, and live video chat support for service like insurance claim enable customers to carry out banking activity fully online from home, which was crucial during the movement control order (MCO). In addition, Maybank adopt advanced technology and automation, including machine learning, robotic process automation, and digital KYC or Know Your Customer onboarding to streamline back office processes and reduce reliance on physical branches. According to the TM1, these digital initiatives were critically in sustaining operation and supporting Maybank's recovery during the pandemic.
Next, the effectiveness of Maybank repayment assistance in 2021. The program recorded a very high approval rate of 99%, which shows that Maybank was able to support most affected individual and SME customers, helping to reduce loan default while maintaining profitability during the pandemic. In total, around 81,000 applications were processed, ensuring wide customer coverage and allowing borrowers to continue repayment with minimal disruption, which helps stabilize the bank cash flow. Additionally, about 38% of approved borrowers were granted a further moratorium, easing cash flow pressure and reducing the risk of non-performing loans. Overall, this measure helped stabilize asset quality and directly supported Maybank profit recovery in 2021. Next, the effectiveness of Maybank digitalization initiative. Firstly, Maybank Digital first approached an able the bank to continue core operation during the COVID-19 pandemic despite limited access to physical branches. Digital platforms such as Maybank to You and MAI ensure uninterrupted customer transaction and service delivery. Secondly, operational efficiency improved through automation, digital onboarding, and reduced reliance on physical branches. This measure helped lower operational costs while maintaining the service quality. In addition, enhanced digital service increased customer engagement and online transaction volumes, contributing to growth in fee-based income and overall operating revenue. The effectiveness of this intervention is reflected in Maybank profit growth after the pandemic, with net profit increasing from 8.10 billion in 2021 to 10.09 billion in 2024. This consistent improvement demonstrates that digitalization successfully supported Maybank operational recovery and long-term resilience.
Next, I will discuss issue 2, which is the major digital service disruption experienced by Maybank on 30 November 2020. On this date, Maybank's digital platforms, Maybank to You and the MAE mobile application became inaccessible or experienced several slowness. This prevented customers from carrying out essential banking transactions such as fund transfer, bill payments, and account access. As a result, customer frustration increased and confidence in Maybank's digital reliability was affected. This disruption occurred during the COVID-19 pandemic, a period when digital banking usage was extremely high due to movement restrictions. Customers depend heavily on online banking for their daily financial needs, making the impact of the disruption even more serious. From an organizational development perspective, this incident revealed several key issues. Firstly, it exposed limitations in system capacity and digital infrastructure, particularly during peak usage period. Secondly, it highlighted weakness in digital readiness and scalability as the system were unable to handle the sudden surge in online transactions. Lastly, the disruption affected customer trust, which is critical in the banking industry where reliability and security are expected at all times.
Based on the issue of Maybank's website and mobile apps being inaccessible or slow, the first intervention taken by Maybank was digital infrastructure and technology modernization. According to the Maybank Integrated Annual Report 2024, the bank invested in next-generation digital infrastructure and upgraded its backend system. This includes strengthening core banking system and expanding API capabilities to support higher transaction volumes. This intervention is important because weak or outdated system can cause downtime and slowness, especially during peak usage. By modernizing its digital infrastructure, Maybank aims to ensure better system stability, faster processing, and reduce service disruption for customers using Maybank to You and MAE. And the second intervention implemented by Maybank is a customer-centric digital strategy supported by agile innovation. In the annual report 2024, Maybank highlighted its focus on improving customer journeys through digital platform. The bank adopted agile method to continuously enhance features, improve system responsiveness, and deliver smoother digital experiences across its apps and websites. And this intervention helps address the issue because it ensures that digital improvements are designed based on customer needs. By focusing on user experience, Maybank can quickly identify problems, improve performance, and reduce customer frustration caused by slow or inaccessible digital service.
For the first 15 instances, Maybank's digital intervention significantly improves system reliability, customer adoption, and scalability. In financial year 2024, Maybank achieved 99.99% digital service uptime, indicating a highly stable digital platform. Digital adoption also increased, with digital customer penetration rising from 75.4% in 2023 to 77% in 2024, and digital penetration increasing from 76.4% to 81.4%. At the same time, digital transaction value grew by 14% to 1.26 trillion ringgit, while transaction volume increased by 23% to 1.44 billion transactions, showing the system's ability to handle higher demands. Maybank also processed around 877 API transactions per month. In 2025, Maybank has facilitated over 4 trillion ringgit in digital transactions, equivalent to twice Malaysia GDP, since 2020, demonstrating strong long-term scalability. For the second effectiveness, strong digital performance supported both financial results and industry conditions. In financial year 2024, Maybank recorded a net profit of 10.09 billion ringgit, with total assets reaching 1.8 trillion ringgit. More than 80% of total sales were conducted digitally, improving operational efficiency and reducing reliance on physical channels. Maybank was also recognized with awards such as Best Digital Bank Malaysia and World Best Consumer Digital Bank in Asia Pacific, confirming that its digital investment strengthened financial performance and customer trust. Overall, Maybank's trade process was successful. I agree with interventions as they address the root causes of the 2020 disruption through long-term digital infrastructure and scalability improvement. Although the interventions were effective, several improvements can further strengthen Maybank's digital resilience. First, Maybank should carry out regular stress testing, especially during peak periods such as celebrating days and festive seasons, to prevent system overload. Second, Maybank can enhance AI-based predictive monitoring and auto-scaling so system can adjust automatically during traffic surge. Third, Maybank should improve real-time customer communication such as in-app setup status updates to reduce frustration and maintain customers' trust during disruption.
To conclude, this case study demonstrates that effective organizational change and development are essential for organizational survival and sustainability, especially during times of crisis. Maybank faced major challenges during the post-pandemic period, including operational performance decline and digital service disruptions. However, through planned change interventions, strong leadership commitment, and continuous improvement, the organization was able to respond effectively to this challenge. The lesson learned from Maybank's experience show that organizations must be proactive, adaptable, and customer-focused when managing change. By investing in digital capability, operational resilience, and stakeholder trust, organizations can better prepare themselves for future disruptions in an increasingly digital business environment. In conclusion, Maybank's transformation highlights how crises, when managed effectively, can become opportunities for long-term organizational development and improvement.